Here's the rewritten script with the same meaning, structure, and approximate word count. If you're 65 or above, there's a strong possibility you sent a payment out this month for a charge the government itself says you're no longer required to cover. Not a reduction, not a partial refund, but a fee you are fully and legally permitted to stop paying. And the overwhelming majority of people in your age group are still sending that money in every single month, every single year, without stopping. This message is for you if you receive a Social Security payment, if you're enrolled in Medicare, if you own the home you live in, or if you still sit down every spring and file a tax return purely out of routine. There are 5 of them. 5 completely separate bills that enormous numbers of older Americans are legally excused from paying or can have eliminated altogether. These rules are genuine. They exist in current law right now in 2026. And here's the part that ought to genuinely frustrate you. Not a single agency is going to pick up the phone and give you a heads up. No envelope arrives at your door. The money just continues flowing out of your account because the entire system is structured so that you have to be the one who speaks up first. I'll be upfront with you from start to finish. Some of this kicks in on its own, the majority of it does not, and that gap between those two things is worth thousands of dollars. There is also one form buried inside all of this. A single page that costs you absolutely nothing and wipes out a charge most people have been told they simply have to live with. Hardly anyone ever submits it. Stay with me because that one comes up near the end, and it's the kind of thing I genuinely want someone in my own family to know about. One quick note before we get into the 5. The rules surrounding money for older adults shift constantly, and when those shifts happen, no government office sends out a courtesy call. The people who catch wind of it early are the ones who hold on to what they've earned. Everyone else finds out weeks or months down the road, long after the opportunity has closed and the payment has already been processed. If you'd rather be in the first group, go ahead and hit subscribe. That's exactly what this channel was built to do, to get this information in front of you before it ends up costing you. All right, let's get into it. Number 1. We're starting with the check itself. A large number of seniors have federal income tax automatically deducted from their Social Security every single month, and a significant portion of those people don't actually owe a single cent of it. Here's how the calculation works. The government takes what they refer to as your combined income, your monthly benefit added to any other money you bring in. If you're a single filer and that combined figure falls below $25,000 annually, your Social Security benefit is not taxed, not $1 of it. For married couples filing a joint return, that threshold sits at $32,000. If you come in under that number, you owe no federal income tax whatsoever on those benefits. So who is still handing money over unnecessarily? The first group includes anyone living primarily on Social Security and a smaller pension who switched on withholding at some point years ago and simply never turned it back off. You completed a form once, checked a box, moved on, and the money has been quietly disappearing ever since. Here's the part that genuinely gets under my skin. Those two figures, the $25,000 and the $32,000, were placed into law back in the 1980s and never touched again. Not once adjusted to account for inflation over 4 full decades. That's not an oversight. That is precisely why a growing number of seniors get drawn into paying each year while the purchasing power of their dollar continues to shrink beneath them. What's the solution? Pull out your most recent tax return or contact the office that manages your benefits and ask one direct question. Am I currently having federal tax withheld from my Social Security, and based on my actual income, do I genuinely owe it? If the answer comes back no, you put a stop to that withholding. That's really all there is to it. That's real money returning to your pocket every single month. Number 2 is completely new. It's the largest tax benefit targeted specifically at older Americans in quite some time, and it is set to expire in 2028. So this one is relevant right now, not at some vague point in the future. It's referred to as the senior deduction, and it came into existence through the major tax legislation signed into law during the summer of 2025. If you reach the age of 65 by the final day of the tax year, you are entitled to reduce your taxable income by an additional $6,000. That's layered on top of your standard deduction, layered on top of the existing age-based add-on that already exists for people over 65. All of it stacks together. This next detail is exclusively for married couples where both spouses have reached age 65. Pay attention here because it doubles. You're not dividing one deduction between the two of you. Each spouse claims their own separate $6,000. That's $12,000 knocked off your combined taxable income simply for being a retired couple who are both past 65. Let me make that concrete with actual figures. On the return you're preparing this year, a single individual over 65 takes the standard deduction of roughly $15,750, then adds the $2,000 age-based amount, and then layers on this brand new $6,000 deduction. That puts you past $23,000 in total deductions before a single dollar of your income is even subject to tax calculation. For a substantial portion of retirees, that brings the entire tax bill down to zero. There is a limitation, and I'm not going to pretend otherwise. The benefit gradually phases out as your income rises. For single filers, it begins shrinking once you cross $75,000. For couples, that phase-out begins at $150,000. Beyond those points, it tapers off and ultimately vanishes entirely. This benefit was designed with middle-income seniors in mind, and the majority of seniors fall precisely in that category. You claim it regardless of whether you itemize deductions or take the standard route. The associated paperwork is Schedule 1A. If someone else prepares your taxes, say this to them directly and clearly. Did you apply the new senior deduction on my behalf, the $6,000 or $12,000 if it applies to both of us? Make sure they give you a real answer. People have already submitted their returns without touching this deduction at all. Now for the one that carries the largest price tag and the one that almost nobody ever pursues. If you're enrolled in Medicare, you're paying a Part B premium. In 2026, that figure is $185.00 every month, and it's typically pulled directly from your Social Security payment before you ever see that money. Most people assume that bill is simply an unavoidable part of being on Medicare. For millions of older adults, that assumption is completely wrong. They are fully entitled to have that premium covered in its entirety, and yet they're handing over roughly $185 every month without question. The assistance is called Medicare Savings Programs. 3 of them, identified by the acronyms QMB, SLMB, and QI, cover that Part B premium entirely. One of those programs, QMB, goes even further and absorbs your deductibles and co-payments as well. Here's a general sense of where the income thresholds fall in most states this year. If you're a single individual with monthly income below roughly $1,350, or a couple bringing in under approximately $1,824 per month, you're likely within range for the most comprehensive program. The cutoff points are higher for the other 2 tiers, so even if those numbers sound a bit low for your situation, you may still qualify. Additionally, several states don't factor in your savings or assets when making the determination. Let me share a real example. I'll call her Diane. She's 68, widowed, living just outside Cleveland on her late husband's Social Security benefit and a modest pension. For 3 consecutive years, over $180 came out of her monthly check for the Part B premium. She believed she had no choice in the matter. A volunteer at her local library ran through her numbers in about 10 minutes and informed her that she had been eligible for the QMB program the entire time. 3 years. More than $7,000 she never needed to pay. Gone. And she has no way of recovering it. The only thing standing between Diane and that money was a form no one ever made her aware of. That's the genuinely troubling reality here. Roughly 1 in 4 seniors who are eligible for these programs has never enrolled. Not because they applied and were denied, but because they never knew to ask and no one ever brought it up. And the savings don't stop at the premium. If your income falls within the range for these programs, you also gain access to additional prescription drug assistance. In 2026, that limits what you pay for a covered medication to $12.65 per prescription, regardless of what the retail price happens to be. Here's the specific action you take. Call Medicare directly at 1-800-633-4227 or contact your state Medicaid office and say these exact words. I want to apply for a Medicare savings program. I believe I qualify to have my Part B premium covered. Those words are what sets the whole process in motion. Write them down somewhere before this video ends. Number 4 applies to you even if your home is completely paid off. Property taxes. Every single state in the country provides some form of property tax relief for homeowners who are 65 or older. Some programs carve a portion off your home's assessed value. Others lock that assessed value in place the moment you qualify, so your bill stops climbing while your neighbor's bills continue rising year after year. Some tie your tax obligation to a percentage of your income rather than your home's value. In Texas, seniors receive an additional exemption along with a freeze on the school district portion of their property tax. In Florida, qualifying long-term residents over 65 can receive up to $50,000 removed from their assessed value, and in some counties the savings are even larger. New York recently granted local governments the authority to eliminate up to 65% of a qualifying senior's assessed property value. This part is especially relevant for the long-term homeowners out there, the people who have lived in the same house for 20 or 30 years and watched their tax bill triple while their income stayed relatively level. A freeze offers the greatest long-term value because it permanently stops the upward climb of that assessed number. But here's that same frustrating pattern showing up again. None of this happens automatically. Your county assessor's office already knows your age. They are not going to contact you. You have to initiate the filing yourself, and in most jurisdictions that filing has to happen early in the calendar year. In the majority of places, missing that window means losing the benefit for the entire year with absolutely no recourse. Even if your income runs slightly above the threshold for an exemption, ask specifically about a freeze or a deferral program, because some of those have no income requirement at all. People leave hundreds and in some cases thousands of dollars unclaimed every single year while sitting around waiting for a notification letter that is never going to arrive. So call your county assessor's office or visit their website this evening and ask plainly, what senior exemptions, freezes, or tax credits am I eligible for, and what is the application deadline? Then immediately put that deadline on your calendar. Don't rely on memory for this. Relying on your memory is precisely what the system is designed around. The final one. This is the form I mentioned at the very beginning. Some seniors don't pay the standard Medicare Part B premium. They pay considerably more. It's a surcharge known as IRMAA, and it activates when your income exceeds $106,000 as a single filer or $212,000 as a married couple. Here's where the trap is set. Medicare doesn't base this surcharge on your current year's income. They reach back 2 years into your history. That means your 2026 surcharge is determined by what appeared on your 2024 tax return. This applies to anyone who experienced an unusual income spike in 2024. Perhaps you sold your home, liquidated a portion of your retirement account, received a one-time distribution, or lost a spouse and the financial picture shifted dramatically as a result. That single outlier year can push you into a surcharge category for a full 12 months, even though your actual current income is substantially lower. And the majority of people simply pay it, because they assume any figure that comes from a government agency is fixed and permanent. It is not. The form is called SSA 44. It's a single page and costs nothing to submit. You file it to inform the agency that a qualifying life event caused a significant reduction in your income, and they recalculate the surcharge accordingly. Depending on which income bracket you were placed in, that adjustment can bring anywhere from $70 to more than $400 per month back off your premium. People pay that elevated amount for an entire year, convinced they have no alternative, when in reality, they were a single page away from putting a stop to it. Contact Social Security and use these exact words. My income has decreased since 2024. I want to submit Form SSA-44 for a life-changing event so that my Medicare premium can be recalculated. That statement is what opens the process. The phone number is 1-800-772-1213. One final point before the summary steps, and it connects directly to everything we've just gone through, because any conversation about senior benefits and paperwork is precisely what fraud operators thrive on. Here's their standard approach. Someone calls with a warm, friendly tone and announces there's exciting news, a new benefit you're entitled to, an adjustment to your payment, money being held in your name. All you need to do is confirm your Social Security number or submit a small processing fee to have it released. Or there's the more alarming version, where they tell you your number has been suspended and there's a warrant associated with your name. Press 1 immediately. Your phone might even display the real Social Security Administration number because caller ID can be fabricated, so engrave these facts into your memory. Legitimate government agencies do not cold call you requesting your Social Security number. They never ask to be paid in gift cards. And the annual cost of living adjustment you hear announced every autumn is processed automatically. No one fills out a form to receive it. Anyone telling you otherwise is attempting to access your finances. If a call like that comes in, here's your response. If this is legitimate, put everything in writing and send it to me by mail. I am ending this call and contacting the agency directly. Then hang up. Report the incident to the Social Security Fraud Hotline at 1-800-269-0271 or file a report online at reportfraud.ftc.gov. Now let's bring everything together into a clear set of steps you can actually follow. Step 1. Locate your most recent tax return and verify whether federal tax is being withheld from your Social Security when your income level suggests it shouldn't be. Step 2. Confirm with whoever handles your tax preparation that they applied the new senior deduction, the $6,000 figure, or $12,000 for qualifying couples. Step 3. Call Medicare at 1-8006-334-227 and inquire about enrolling in a Medicare savings program to have your Part B premium covered. Step 4. Reach out to your county assessor's office regarding senior property tax relief options and immediately record the application deadline. Step 5. If an unusual income year caused your Medicare premium to increase, file Form SSA-44 with Social Security at 1-800-772-1213 to have it reduced. Quick recap of the 5. First, the federal tax on your Social Security benefit that you may not actually owe. Second, the $6,000 senior deduction currently available through 2028. Third, the Part B premium that a savings program can cover completely on your behalf. Fourth, the property tax relief your state provides but will not proactively offer you. Fifth, the IRMAA surcharge that a single free form has the power to eliminate. Now for the honest portion of this. Everything covered here is general information and is not intended as personalized financial or tax advice, and I have no visibility into your specific circumstances. Every single one of these provisions has income thresholds and state-level rules that vary and can change. Before taking action on any of this, confirm your individual situation with the appropriate agency or with a qualified tax professional you have confidence in. The phone numbers shared throughout this video are the legitimate ones. Use those, and not any number that appears on an unsolicited caller's ID. And do one more thing before you move on. Think of one person in your life, your parent, the neighbor down the block, the friend from your congregation who keeps mentioning how much her Medicare bill bothers her, and send this video directly to them. Even one of these 5 items could genuinely put real money back into their hands before the year is out. That's worth 30 seconds of your time. I'll see you in the next one.